Welcome to a Junior VC Unfiltered. I'm your host, Mazin, and this week I have Rohan and Abhinay with me. And I wrote this piece too. In this episode, we'll discuss our latest piece, Is This India's Crypto Movement? So to get us started, we've been thinking about writing about crypto for a long time. And with CoinDCX recently becoming one of India's first crypto unicorns, we thought now was a good time to talk about cryptocurrencies in general and how India has participated and talk about our views of the future. So to get us started, Rohan, can you tell us how did Bitcoin get started globally and how did India catch on?
Hey, Mazen, yes. Before we get on to Bitcoin, right, let me just take a couple of minutes to talk about how we now use a thing called internet, how it came into being, right? Back in the 60s, the US Department of Defense started an experiment where they allowed computers to communicate with each other. It was called the ARPANET, and that laid the foundation of what eventually became the internet and became like a household name back in the 90s. Google famously now uses that technology, right? Now, early in the 2000s, right, when we look at back in that period, we also saw that communication was a major factor. That also kind of period gave foundations to what we now social media, right, which became like the next foundation for the next set of evolution and innovation on it. Now, as we evolved from 2000 to early 2007, 2008, a lot of us know that the global banking financial crisis happened. Around the same time, a pseudonymous developer called Satoshi Nakamoto, that a lot of us would have heard of by now, wrote a white paper for technology called Bitcoin. What that essentially meant was instead of trusting third-party banks, centralized banks, people could now do a trustless transaction through decentralized mechanism over the internet. All of this kind of started with one white paper that he wrote. And by 2007-8, like when he started, right, it took about 3-4 years where a lot of people were just experimenting on it. And then kind of like people started realizing, okay, that maybe there's a lot more potential to it, to the whole peer-to-peer transactions happening through a decentralized way. So around 2012, 2013, people started kind of building forums and organizing events around it. Around the same time, a 17-year-old developer based in Canada called Vitalik Buterin attended one such event after being prodded by his dad about this new technology called Bitcoin. That's when he started, that's when he wrote a paper about on Bitcoin as well, what eventually became the foundation for Ethereum, as we now call it. So in 2014, Vitalik started the Ethereum project, and then he kind of like took on a new technology, like new layer to Bitcoin, which was essentially called smart contracts. That's also the time when the Bitcoin price was very volatile, so around $100. So it like went from essentially zero to $1 to $100. So people saw this like crazy amount of return in a very short amount of time, which attracted a lot of global attention. 2014 was also the time when an exchange called JunoCoin allowed Indians to buy Bitcoin as well. The price moved as a result, right? The price moved from $100 per Bitcoin to about $1,000 in a very short span of time. The same time again, right? Like because the price action was extremely high, unprecedented, so to say, right? RBI warned the general public to just kind of stay away from such wild speculation in the fear that a lot of retail investors might get carried onto it and lose a lot of their life savings. Again, right, as a result of that volatility and regulatory flip-flop, the price kept going up and down, and again went back from $1,000 to $600. But again, like a lot of people at that moment kind of, right, were hooked onto the whole ecosystem, and the first crypto winter came, so to say, right? So people who were kind of really looking long onto the whole blockchain Bitcoin ecosystem started working on developing technologies that would eventually shape what we now look at as a Bitcoin, as a crypto ecosystem. In a couple of years from 2014 down to 2016, 17, the price again skyrocketed and we hit about $20,000 per one Bitcoin. Now, if you look at the Indian scene again, right, like we look at 2016, So 2014, Coin started, right? In 2016, we had about 10 exchanges, which allowed Indian retail and investors to exchange and trade cryptocurrencies from all across the world. Even though the volumes, even though the exchanges were not really big, some of them are processing as much as $100 million of cryptocurrencies in a month. So that was one key moment, right, between 2014 to 16, when Indians started getting exposure to the whole Bitcoin ecosystem, broadly the cryptocurrency ecosystem as well, and people started getting a taste of how such a volatile asset class kind of behaves.
Thanks, Rohan, for that really good overview of how it all got started in India. Abhinay, can you tell us what happened in India since 2014 and what drove Indians to crypto, and elaborate a bit more on how the government reacted?
Sure. So as Rohan pointed out, right, by 2014, Unocoin was there, and a government was already trying to give some indications on their stand. RBI came out with some statements. So there was always a tussle between what is happening at the regulation level. At the second, on the other side, there's something happening at the Bitcoin level. It moved from say $100 to $1,000 for the first time. So there was some euphoria around that as well. That what is happening? What is this the new currency? And by then, as you see, something good that was happening was at the stock market, right? By now, companies like Zerodha, Grow, which we have covered earlier as well, they were building new products, right? That was just disrupting the way retail investor in stock market. That brought in a change. People found that there is a new asset class in equity, which is better than, let's say, gold or property that they have seen prior to this. So people are also opening up to the idea. So there is one change that was happening at the behavioral level. Retail investors were ready to try new asset classes. On the other side, RBI from 2014 to for next 2-3 years, they had not come out with a very positive view on cryptocurrencies. So and sometime around 2016, demonetization also happened. So that time there was again a fear that whether this will work or is this required on those lines. So that kept happening, and over time new players also started entering this space. So in India, one, investor maturity started coming in this space. Second, new players started coming into this place. They started innovating on their own. WazirX came, CoinDCX came, and Zepto was already there, right? So all these players started building the entire ecosystem as well. The WazirX built some new products which can directly help retail investor invest in, let's say, a mutual fund type of offering for cryptocurrency, right? So that evolution was also happening for cryptocurrencies. Something important that happened was the way Bitcoin was moving, and sometime around 2017 is when Bitcoin kind of peaked, and people were everyone was looking forward to invest in cryptocurrency. But then there was some crash in Bitcoin prices. Also, sometime around April 2018, the RBI came out comparing it to a Ponzi scheme. Then there was WazirX that started a new Twitter campaign, and then things went here and there till 2020 when SBI lifted the ban on cryptocurrency, and that's when exactly kind of it took again to the trading volumes which we have not seen before. So that was a very critical period. If you think of it, 2014 is somewhere kind of started. 2016 is kind of when the demonetization happened in the first wave of cryptocurrency game, and then 2018 when there was some uncertainty, and then in 2020 when lockdown happened, again it started taking off. All this happening in parallel with the maturity of the Indian retail investors who are ready to try a new asset class.
Thanks, Abhinay. It was the perfect combination. And by the start of 2020, Bitcoin globally was trading at around 6 lakhs per Bitcoin. The price had been steadily rising, and then all of a sudden, just 2 days in March, the price plunged. Bitcoin lost more than half of its value, and everyone was saying it was investors moving to the safety of cash. The pandemic had just started, but over the next few months, in 2020, the conversation sort of changed. Bitcoin prices started to rise again, and by May it had surpassed the initial in 2020. It was trading at about 7 lakhs per Bitcoin. And by the end of the year, the price rise was astronomical. It was one of the best performing quarters, the fourth quarter of 2020 in Bitcoin's history. So, the kind of rises and crashes continued. But what happened was new projects started to emerge. And what these new projects were doing was they were solving some of the problems with Ethereum. On Ethereum, transactions cost up to $10, and it's limited at 15 transactions per second, which makes it a problem if you think about applications like games where you need a lot more transactions, right? So many alternatives emerged and raised billions, but the fact is Ethereum is still one of the most used platforms today. 95% of other cryptocurrencies like Dogecoin, which I'll talk more about a bit, have all been built on Ethereum. And what we found fascinating about this is that, like traditional companies in the crypto space as well, building a strong community like Ethereum did was their moat. There were better platforms with better technologies coming up, but their developer community was their moat, and it's what kept people on Ethereum. Ethereum, and this is one thing that Mark Cuban spoke about as well when he invested in Indian blockchain startup Matic. He said Ethereum, Bitcoin, and other legacy systems are here to stay. And the story of Matic is actually quite interesting. They raised funds from a global market through an ICO, and the founders recently became one of India's first crypto billionaires. Matic, what they do, like what makes them special, is actually one of the first companies in the world to be able to scale Ethereum. And without getting into too much detail, by grouping transactions together and minimizing the amount of data that's stored on Ethereum, Matic was able to execute 65,000 transactions per second compared to Ethereum's 15 at a fraction of the cost. And at the same time, Matic allowed developers to use everything that they loved about Ethereum. Companies could just switch from Ethereum to Matic and everything would work. So it made this transition really easy. And with Matic leading the way, I think we're quite optimistic about the future of crypto in India, but want to go back to the prices and talk a bit about what happened globally at the start of this year, 2021. Tesla announced that they purchased $1.5 billion worth of Bitcoin as they prepare to accept Bitcoin as a form of payment. And Elon Musk spoke publicly about his support for Bitcoin. And by Feb 2021, Bitcoin was trading at 35 lakhs per Bitcoin. I mean, to put this into perspective, 1 year ago, it was hovering around the 6 lakh mark and then dropped to 3 lakhs. So that's a 10x increase in price, fueled by Elon Musk's tweet. And keep in mind, at this point, Elon Musk, had done this before with Tesla stock and gone into trouble with the SEC. But with Bitcoin, there's no regulator, no one to fine Musk. And it seemed like it was almost him kind of playing around with his influence in the market, where he started talking about Dogecoin, which was a currency that actually started as a joke. And his memes actually propelled the value of that cryptocurrency, the market cap of it, to $54 billion. And now at this point, experts were talking about Bitcoin as an alternative to gold. It had completely changed in just 1 year, the global perception. And at the same time, responding to this extreme volatility, China banned minting and trading of cryptocurrencies in general, stating that it was toxic and it infringed on people's safety and was disrupting the economy. But the point here, kind of coming back to what this all means, right? The long-term future of Bitcoin might be in question, and regulation will continue to evolve. But the underlying blockchain technology is here to stay. And if you look at what's sort of been happening, what's different about this evolution versus the traditional tech space, prices, in this case, crypto prices, are almost correlated to startup activity and social media activity. What you see is this sort of feedback loop, right? With higher prices, you have more conversations happening on the internet, more developer activity, and then you see more startups being formed, which push the prices even higher. And where we are today with the crypto space, is actually quite interesting. We have platforms like Ethereum that have sort of built standards for us. Things like NFTs have come out of it. It's essentially a set of code that developers have agreed to, and that any exchange can interact with, right? So anyone can build a layer on top of it. You see now exchanges that have NFTs from multiple different blockchain platforms all in one place, thanks to these standards that have been created. At the same time, platforms are trying to improve on Ethereum. There are platforms that have come up with a much more efficient way. Ethereum kind of builds on Bitcoin's consensus mechanism, which is really inefficient. But other platforms like Cardano, EOS, Cosmos, Polkadot have grown in popularity. There are specific Opus blockchain platforms like IOTA, Ripple, and Flow. Like these platforms are dedicated for a specific application, like Ripple, for example, specifically for remittance and money transfers between countries. And several Indian companies have started contributing to building this infrastructure layer that people can build on top of. Two examples that I thought were quite interesting. Ethereum push notification service based in Mumbai. They basically create a decentralized push notification service that games can leverage. And there's also InstaD app, which is building infrastructure for decentralized finance. Think of this as savings and loans without a bank being involved, right? You're a group of people and you have code that's kind of being the intermediary, facilitating loans. There are other companies in India that are building bridges so that enterprises can connect directly with blockchains using the APIs that they're familiar with. But what's so exciting is that I think there are many more Indian companies that are just getting started working on user-facing applications. You know, we think that if you look at what we've learned from the evolutions of the internet, social media platforms, and what's emerged, this next layer of user-facing applications is sort of just starting to come out in this crypto space. And that's where there's a lot of growth and scope for localized apps that cater to small groups of individuals to enable them to just make commitments online in whatever shape or form. So Indian crypto might be late to the party, but we really believe the future is bright for companies that can focus on solving real problems and keep up with the rapidly evolving regulations. And just this year, CoinDCX became a unicorn, Polygon exploded, WazirX handled record volumes. So it's been an incredible year, and crypto. Thank you everyone for tuning in to a Junior VC Unfiltered. We hope you enjoyed this episode, and we'll see you next week.